Let's just start with those PPI numbers and them looking, much better than what economists that had been surveyed thought. What is your making of this picture? Because also remembering that CPI came in lower than most economists had expected it to come in.
That's good news, particularly given that we've seen steep rises in inflation. But I think going forward, we're going to see pressure coming through, particularly from the fuel and energy costs, and food prices might slow down if agriculture prices are slowing down, but it's still a good number.
But also what's quite interesting is when we look at the food prices, the food at manufacturing was unchanged at 0.7. You talked about, energy costs, products of petroleum and coal unchanged at 1.6, so we didn't see a drop there.
Yeah, but that is good news given the fact that we've seen increases in oil price, in petrol prices. So if you see the number unchanged, I think that's much better than I expected, because I expected it to go up alongside the petrol price increases. It might still go up in the coming month because we're expecting a steep rise, particularly in the month of April, given the fact that the minister put the expected increase in through the budget process, and we're seeing there's an under recovery. So we're going to see a petrol price increase, I don't think, of less than 50%, around 60% maybe.
So let's just talk a little bit about the consumer and where they're at right now. We've had consumer confidence numbers where consumers are feeling a bit stronger about their position, and they're much more confident about their own position as individuals than the economy at large. Just talk to us a little bit about what you expect of the consumer, or where you see the consumer standing for the year ahead.
I don't expect to see strong expenditure coming through from consumers for 2012. We've seen surprisingly strong numbers, in my view, for the second half of 2011. But part of that was funded, not because disposable income increased as employment numbers increased. Part of it was funded by unsecured lending. Now, you don't want that situation to continue to fund people for consumption expenditure. So I think going forward for 2012, seeing that we are not going to see a substantial increase in the employment situation, disposable income is going to suffer. One, just because you're not going to see a substantial increase in the number of people employed. Two, if inflation keeps on increasing at these rates, getting out of the target band, that is going to put pressure on discretionary spend. You're already looking at petrol prices, as I said, going into around 60 cents per litre increase in the month of April alone. That comes alongside the normal toll increase. I'm not talking about the Gauteng tolls. I'm talking about the normal toll fees that we used to pay over the years. That comes alongside expected increase in fuel prices, like your electricity prices are going to go up. Yes, definitely lower than what we anticipated, 25%, coming in at around 16%, but that is still 16% on 2 years of 25% plus increase in inflation. So I don't think the consumer is going to be in a very good space for 2012.
So now let's just talk a little bit about what you would expect, for instance, CPI numbers then to look like at the next reading.
Well, the next reading of CPI numbers might be slightly above what we have now. This was an unexpected change. So CPI is definitely still going to remain well above the target band and revert back in the second half of the year. That is also expected even by the Reserve Bank. So I don't think the numbers that we're seeing today, either for PPI or what we saw last week, is going to have a material impact on the decision that the Reserve Bank take. Yes, they've sent a signal out that the bank is still very serious about inflation targeting, because if they take the foot off the brake, so to speak, if people feel that interest rates are remaining unchanged, even if we are outside of target, and the bank doesn't signal anything, it might give out the wrong message. But despite those numbers, I don't see that the bank is going to change the stance.
That was going to be my next question, is what you think the Reserve Bank governor is going to announce today. But let's just talk about, you were saying to me that you're of the opinion that we're not probably going to see a hike for the rest of the year.
I don't think there should be a hike for the rest of the year. If we should see any hike in interest rate, it should be into 2013. We have seen the numbers that came out, particularly GDP numbers. For 2011, we made the cut. We reached around 3%. I'm not seeing where growth is going to come from, particularly from the domestic front. There are some signs that we might have export numbers improving if Europe continues to stabilize. But domestically, we have our own problems. We have problems in the manufacturing sector, not because we can't export, but we have problems because of electricity. You know that Eskom has indicated that big users shouldn't use as much electricity as they normally use. They were expected to cut down their usage by 10%. That does a lot of damage to your production capacity. You actually, we know that manufacturing production capacity is lower. I think part of the reason that is lower is because they have to cut down on production. And if you're not seeing that coming through from the domestic side where you have supply constraints, I think that is a big problem, and that is what is going to hamper back the full recovery of this economy, not because of external factors. Yes, that is a concern, but those kind of domestic constraints need to be addressed if we're going to see a major increase in the economy.
Because what we did see PPI on mining and quarrying, that was up actually 1.8 from 1.7 in January.
Yeah. But I'm not expecting to see a substantial increase in mining output, and that hasn't been doing well for some time now. And if the mining manufacturing are not doing well, and on the trade sector, that is going to be affected by what happens on the consumers' pockets. And I think discretionary spend is going to be under pressure.